Felix here. As the market rally has fizzled out, everyone's asking themselves, when is this actually going to turn around? When are we going to see an actual real rally? I'm going to answer that question for you here in this video. I will also end up by giving you the cheapest trade imaginable, and I'll also show you the beauty of the kind of trades that we're doing at the moment and how much money I'm making today. So before we get started with that, free benchmark, UBS's worst 9 stocks of the year, not quite. They say these are stocks to protect you from a recession. I beg to differ. If you want to understand why I beg to differ, go to felixfriends.org/UBS9. It's completely free. It's a benchmark that looks, oh, no, it doesn't look like that. That's the wrong screen. It looks like this. So felixfriends.org/UBS9. I've highlighted in red the numbers that I think are abysmal. So look at these stocks with caution. Of course, not the following financial advice. You know that by now. That's what you're here for, right? Disclaimers all around. Felix, greatest disclaimers on YouTube. That's what you keep sending to me. This is S&P 500. Why all the lines? These are all moving averages. Something called the Madrid ribbon, which is actually quite visual. I also have a bunch of moving averages in the back of the moving averages. I'm rather a fan of moving averages. But what you can see is that despite what everybody was telling you on CNBC, that this is some sort of real rally, the top line here stayed red, even during these 3 days of rally. Or 2 days of rally. And that's because this never really was a rally. This was nothing but unwinding of short positions, all those options trades expiring on Friday and so on. So this was never gonna last. And that's kind of what we thought. And it isn't lasting today. And it's making us money, which is lovely here. Up about $650 so far on the day. Realize some of those profits. But really what you're here for is when Felix is this going to turn around? Well, I've spoken to Winston, and he's got his paw on the pulse of the market, and he says, watch for these dates and understand the order in which they happen. So we're going to get the JOLTS job opening data. We got that in October, right? That was a bullish signal for the market because there are less job openings. So that was kind of partially also what ignited the short covering rally there over the last 2 days. Now we're getting much data this month out. Well, there is a FOMC minute data coming out next Wednesday, which is sort of like a non-event because it's old data, but it is still going to lead to short-term ups or downs volatility. Not that useful, to be honest with you, because it's old data, but of course we'll go through it. Producer price index, that's much more useful. That's important. So watch out for that. Core inflation rate on Thursday and inflation rate, that's also going to be very, very impactful, short and longer term. And then really you have to leave October because October isn't a month that tells you all that much, and go into November. The beginning of November starts with JOLTS job openings. If they are lower again, say they come in at 9 point something million, then the market is going to rally again and the Fed's going to go, hang on a second, our task is to tighten financial conditions. You lot can't start your own party. Put the champagne away. No corks popping here. And they're following on the next day with the Fed interest rate decision. To me, that is a market tanking event. I fully expect them to give us a 0.75% interest rate hike. You could say, yeah, that's priced in, but half the market's asleep and likes to be surprised. A lot of these people coming out of their drug-infused slumbers from the night before. You know what the investment bankers are like. Just kidding. So as we go through, so the problem with that Fed rate decision is it's too early in the month, 2nd of November. They haven't got enough time to collect data to actually change their mind. So it isn't really going to matter. In mid-November, we get core inflation rate on the 10th, and then we zoom forward to, this is a really important set of minutes here, 23rd of November. Seems like a long time away, but that set of minutes will hopefully show some divisions, some caution on doing too much by, I don't know, Daly or somebody, or some other Fed presidents. And then the week after we get job openings again, hopefully this is going to end up with, 9.0 million or even less than that. And that again could be a catalyst for the market. But really what happens is in December. So yeah, honestly, I don't think this macro environment really goes away till December. We get the Fed interest rate decision on December 14th. That's good. They've got tons of data. They can absorb all of the November data, half of the month of December data. They get inflation the day before. And that is the opportunity for the market to see some wobbling in the strength and the determination of the Fed, where they might just give us 0.5% because they're kind of recessing the data. And that sort of perceived pause, that perceived peaking of rates is what really could turn this market around. So Christmas present is the way I see the rally. Now, why also that time frame? Well, look at, this is JP Morgan's quarter-on-quarter seasonally adjusted CPI data, and they're basically saying that in the fourth quarter of this year, which is here, we're going to get about 1.7% seasonally adjusted CPI. So you're going to get this massive whopper of a decline. Why? Basing effect. A lot of inflation kicked off in Q4 2021. So if oil goes from 50 to 100, and then that's 50% inflation, right? It stays at 100 for a year. How much inflation is that? Zero inflation. That's how it works. That's how it's calculated. So that's what they're saying. Also, that Biden lot and so on are getting immigration back up. So during COVID, immigration basically collapsed in the US. Temporary visas went to as near zero as they've ever been, and they are recovering. We're getting towards the million mark sort of thing in this year again. So that is going to take some pressure off the market. Also taking pressure off the market of my portfolio is that we're up 103% on the year. Isn't that brilliant? You want to know how to join us? Well, I'll tell you in a second, but let me give you a bit of insight here first, sort of insight I share with my community. The cost of a stock, of a call option. What's a call option? A call option is a bet something's going to go up. That's how most people look at it. Is at one of the lowest levels in the last decade. What does that mean? Well, compared to the index, what do you want to do? So basically, don't sell too many calls because you're not going to get that much premium potentially. And what should you therefore do? Should you be buying calls? Well, a lot of people like to buy calls. I'm not a fan of them. You're always overpaying for calls, normally 4%. So I would put that in big brackets here. Instead, what I would look at is, well, you could use calls to hedge positions. That's what I would look at. So if you are setting up a trade where you are selling a call, you're making some money. You want to hedge it with a bullish call. That's going to be very, very cheap as well. So it's something to really look at. Yeah, you could go really bullish and long, but be cautious with that. I would, generally speaking, go out sort of 40 to 40 days, 40, 50 days on an option. But you really need to understand some of the following. This is not about stock prices. Options are about volatility. Options are about time. And options are about, to some extent, stock prices. But it's really those three things. There are actually some more that feed into this. Those together determine whether or not you're making money. So most people who trade options in the retail space only understand price. So they understand a third of what's required. So be very, very, very cautious here. This is a trade we set up about a week ago on Netflix. And you might remember me mentioning this. So we set it up right there, basically. And we wanted Netflix to fall. That was our direction. We were like, this stock is going to fall. That's what we were looking at. It had been falling for quite a few days. So it seemed bearish. What did it do? It went the opposite direction. It went up like 10%. Literally, it went plus 10%. Did we lose money? No. And now it's coming nicely back down, but actually it didn't matter. Our trade was not fall in that direction. Our trade was let me take a different color, go up from here or fall all the way from $251 to zero. So anywhere between $251, I was making money. So that's the beauty here, that you have this massive room of 20% to be wrong by that allows us to make money. And that's how we make money consistently. That's how we make money in a really nice way. You only have a couple of trades open at the moment because it's a bit of a choppy market. But we might take some profits actually on that Netflix trade today. I've already taken some other trades off the table today. If you want to understand how the protocol that I've developed works and how you want to work with me directly and my coaching team directly to learn that. If you have at least a 5-figure portfolio, go to felixfriends.org/coaching, learn how you can make these kind of returns that I'm making in a safe way. Because I'm wrong half the time, like everybody else. We can guess 52% of the time we can be right, but basically half the time we're wrong. So our trading strategy, our protocol allows for that. Most of the money I made this year was on trades that I was wrong on. And that's the beauty of it. So if you want to understand how I came up with that, you want to understand how I've labored for years to figure this protocol out that actually works in all markets, and it works in this market. This market we haven't seen in 20 years. So I'm very, very happy about that. My students are very happy about them making money. So 5 figures, check out felixfriends.org/coaching. If you're not quite there yet, then with the 5 figures, brilliant. You want to get started. That's the most important part. Get going, get over the 4 figures. Check out felixfriends.org/options. Coupon code there is freedom, as for financial freedom. And we really need to get you to 5 figures, and then we need to get you to 6 figures. But you got to get started. If you build an extra income stream by selling options and you do it in a sensible, profitable, risk-defined way, the way we do it, none of that nonsense gambling on leaps and hoping and praying something's going to go one way or the other. We don't do any of that. This is statistics. This is charts. This is probabilities. This is understanding what really happens and taking the way that Wall Street trades options, but adjusting it to a portfolio size more closer to yours than to 9 figures. So there we are. If you enjoyed this kind of macro roundup, I'd love it if you let me know. If you have any questions on anything that we covered here, pop it in the comments down below. I will answer them all. And I wish you a beautiful trading day. Make some money and see you soon.